You're listening to Toronto's #1 real estate podcast, powered by Watson Estates. The most successful local real estate investing starts right here, right now. Here's your host, broker, investor, and social media influencer, Bradley Watson.
Good morning, investors. Bradley here from Watson Estates. It is Thursday, July 16th, 2020. Thank you for joining us once again on Toronto's #1 real estate podcast. We're #1 on iTunes, Spotify, and Google Podcasts for Toronto real estate. Every single morning, we're here tuning in with our friends, our family, our local investors here across the GTA to talk about everything going on in our local marketplace, especially with COVID. And today we got some great topics. We've got, first off, why is the 905 now outperforming the Toronto area activity? We're going to discuss some of the trends that people are mapping out, not just ourselves. I'm going to, of course, share, as I always do, my 2 cents. But we're also going to look at what the media is saying is happening and what the stats say are happening. And why is there such a big draw to pre-construction right now? And this comes from a personal topic because I have a flood of people asking me questions about pre-construction. Even this morning, I woke up to another message. So I'm going to share with you what that conversation looks like. And if you're considering a pre-construction in a market like this, what you're going to want to know before you sign the dotted line. And then what direction will interest rates go through 2022? Yesterday, there was a interest rate announcement made. We're going to talk about what that was and what is going to happen and how you should be positioning your mortgage to make the most of the next few years. While I can't wait for COVID to end to party with my builder buddies again. Like seriously, they can really raise the roof. I was actually considering becoming a drill operator back in high school, but it seemed too boring. No, I'm just kidding. I was more of an academic. The extent, other than being a realtor and being involved in that side, the extent of my building is the occasional documentary. Like just last week, I watched a show on how they fix steel girders. Riveting. We're having some fun here. Thanks for joining us. Make sure you hit the subscribe button, hit that like button. We're going to continue to put out fantastic content. And if nobody's listening, that's okay, because I'm learning from myself and for my clients, and we're having a whole lot of fun making a whole bunch of bank here in the GTA. So let's talk about this first topic, the question on whether the 905 or the 416 are doing better. Well, an article from Toronto Stories makes it clear when they say the 905 is now outperforming Toronto area housing activity report. Guys, this was not the topic article of the day. Generally, I find, let's say 60% of the time, the best article to put forward is the first one. But this one got hidden in the back. It's in the shadow of another one, which was a video. I guess people just like videos, which is okay. But this article is jammed. It's so juicy. Super juicy. Here we go. While the latest data from the Toronto Real Estate Board shows that activity in the housing market is returning to pre-COVID levels, a new report also reveals there is a shift in consumer behavior as a result of the pandemic, which we know, right? We know. But they've got this report that's come from Ryerson University Center of Urban Research, and they agree that the recent data that Trev shows that the GTA housing market is, quote, snapping back. Right, so we've pretty much reached nearly back to pre-COVID levels as far as sales, and the average sale price reaches a new record of $909,000, an 11.9% year-over-year rise. That's the price. But here's where the article gets interesting, and from this point on, you're going to learn a ton, because I know I did. I love hearing the stats. I love hearing what I'm learning, not so much is what's happening in the market, but more so what everyone else is learning about what's happening in the market, if that makes sense. You guys know, if you've been following us for a while, there shouldn't be anything new here. But what is more important is that I've been saying it, but I haven't been reading it. Now we're reading it. I love this cycle of get the info to your ears, watch for it, here it comes, and then reading in the paper a week, 2 weeks later. And this is what we're doing today. But importantly, this is the article, it also notes that the suburban markets, specifically those in the 905 area surrounding Toronto, are now outperforming the 416 area, and a, quote, dichotomy is being set up between the two markets. I love that. We can't look at them equally. As per the report, much of the strength in the 905 can be attributed to the demand for single detached homes, right, including semis and townhomes, where total GTA sales were up 13% and 12% year over year respectively, surpassing pre-COVID levels. They have this little chart on here, and it is so interesting to see. And this, looking at the number of sales, we often at least here, I graze over sales because it's not really an indicator of price, right? Sales really is an indicator of the pocketbooks of realtors, right? It's the number of transactions that are happening. It's also pocketbooks of property or land transfer tax, the government, right? That's really who should care mostly about sales. Now, activity coming down could matter, but when listings come down too, who cares? But in this example, it's still very fascinating because when we look at condo apartments in the what do they got here? Which one's which? 416 is blue. Okay, so with the 416, the number of sales is down for condo apartments, just under 10%. In the 905, this is a fun fact I didn't really think about. Condo apartments in the 905 have dropped more than 20% in the number of sales. So in other words, you think condos in Toronto are rough. As far as sales go, it's actually worse in the 905. It's harder to sell, which makes sense, right? Because you want these condos, the way they work is they happen in urban centers. And when people are like, I don't want to be in an urban center, then they move outwards. Now, Toronto, people can justify still being there because they're working there. I mean, a lot of people are working from home, but there's life in Toronto. So obviously in the 905, the condos are far less attractive than even in Toronto, which we know is getting hit. But when we go into the detached segment, we see a 10% rise plus in the 905, but we see a drop of 10% in the 416. Semis, a whopping 20% plus drop in the 416 and pretty much flat in the 905. And townhomes up in both categories, but definitely higher in the 905. So the only one losing, as far where the 905 is losing, is in the condo apartments, right? Because less people are buying, there's less transactions happening. So if you're trying to sell a condo in the 905, it's going to be a little harder than the 416, but it's still rough in both categories. But other than that, downtown Toronto is getting clobbered. Detached, semis, townhomes, as far as the number of sales relative to the 905, which is funny because it almost lines up opposite with where prices are going. So this is why we often will steer away from sales, but we'll focus more on the months of inventory. But I love how this article continues. Here we go. According to the report, average sale prices were up to double-digit levels on an annual basis for ground-related housing across the region. The total number of home sales that occurred in the 905 in June were on track to reach 67% of all GTA sales in 2020. Listen to this. Okay, so remember, 905 is on pace to reach 67% of the GTA sales. But in 2020, when we hold it after holding steady near 2 decades at 60%. So for the last 2 decades, we have had a 60% as the number of sales in the 905. Now, for the first time in 2 decades, it's jumped up to 67. So there is an abnormal number of sales or transactions happening in the outskirt communities of Toronto. This further demonstrates that buyers are turning their attention more and more towards the suburbs. So if I were to ask, I can ask the same question to a bunch of people. Where should we be buying our properties? And you will get 2 totally different answers. You as an investor need to decide. Do you want to run where the mass is running? Do you want to go to the suburbs? Do you want to go outwards, right? Where we're having, most likely we're going to see price appreciation in the short term, right? Or do we keep our cash and do we take our eyes and we focus them on the areas that are hardest hit, namely Toronto? If you want to see a price discount, you want to be in the place that gets clobbered, right? I mean, obviously, assuming eventually the bigger markets, the more desirable neighborhoods will come back quicker. It's up to you how you make that investment, but these are the stats. As for what's weakening the 416 market, the report suggests condo apartment sales are the main culprit as they fell. Guys, this is the first time I'm hearing it in an article very plainly, very clearly to describe it to you. And this is actually why it's kind of funny this isn't the top article, because people need to know this, is that the condo suggests apartment sales, they fell 21% in June compared to the same time last year. But we're less concerned about sales. Here's what they say. The overall condo market is still holding in what is considered a seller's market, which is supporting positive gains in average sale price. But changes in months of inventory show that the condo market is loosening very quickly while all other markets are tightening. We've been saying this. There you are. There it is. And it comes near the bottom. But we need to be paying attention to this. Why is this not the most important news right now? Is there not enough condo owners in Toronto to talk about this? We've been tracking it, right? It's the first time I'm seeing the media talking about it specifically, that months of inventory are coming down in the condo segment. We got to be really paying attention because that's a leading indicator of price depreciation. Okay. It's going to get a whole lot harder to sell your condos, guys, because if the media is starting to talk about it now, just be prepared, right? The word is out. The stats were out 3 weeks ago, 3 weeks ago. But the news is out now. What a delay, right? What a delay. The report says that while millennials will continue to create a demand for ground-related housing, the condo market for the 416 region will remain a growing area of weakness for the housing market well into next year. This is partially due to immigration being halted as a result of pandemic. It's due to many things. And guys, be careful, okay? If you're going to go buy a condo right now, buy it with long-term in mind. And this is going to bring me in a moment. We're going to talk about pre-construction and what that means and why investors are looking there and what that could do for your portfolio and some of the risks there as well. So this is why I've been telling you guys to wait. The media is lining up with it now, which is great because then at least I've got some kind of enforcement. It's not just a voice shouting into the wind. I'm kind of like one of those damn dandelions, right? You just shoot it in the wind and hope for the best. That condominium downtowns for weeks, right? We've been talking about that. Let's watch prices come down first. Let's find our bottom in a market where people are fleeing. There's going to be deals. There's going to be deals. I expect resiliency in the low-rise units in Toronto, though. So don't, back to this dichotomy, as they call it, don't mix condos and low-rise. Don't confuse them. The other segments, their months of inventory are not coming down. In fact, they're going up. But in the condo segment, if you are considering buying a condo or if you want your final opportunity as a first-time buyer to get into our market, watch condos come down and jump in and grab that puppy. Hold on to it. Let's not mix up the two. There's definitely big differences in the housing segment. The number one article I can't skip over without talking a little bit about it. So it was, of course, a video, but here's what they're talking about. Remember what I said in our past podcast? Last week, very optimistic news. Very lot of good stuff. This week we got Treb saying, you know what, we got to be careful. We gotta be concerned about supply, right? Which, I mean, is still negative news. It's on the opposite side, but it's negative news. We've got the Bank of Canada, which we'll talk about in a second, saying we got to be very careful, right? Our GDP's coming down. And as well this week, now we have this pitch being on, this idea of a, quote, potential trouble looms, right? Toronto housing market believes economic downturn, bellies. Toronto housing market bellies, economic downturn. What a title. But potential trouble looms. Bob the Builder doesn't have a belly. He's just well built. For example, the housing market in Toronto no longer show any signs of weakness. Indeed, housing sales and prices in Canada's most populous city during June 2020 have neither matched or surpassed their levels from the year previous, right? As far as we stats. But listen to what they say here and what the video is talking about. This resurgence is a welcome sign since it hints at economic resiliency. But the larger question are whether housing markets will continue to outperform the rest of the economy and for how long. First of all, yes, it will. Second of all, how long? I mean, housing is, our market is housing. Like it fuels our economy here. So they're linked so well. Some experts believe housing markets might not have fully digested the increase in employment uncertainties that are expected shortly. I don't know if I agree with the way that it's coming. See, a lot of people say it's coming specifically from a recession, right? It's coming from these things. I think my main question mark is I think it has to do with uncertainty, and I think it has more to do with psychology. I think we have a very strong business, a very strong sector, and I think if you look at it from a very high level, the supply crisis is so big, our prices are bound for appreciation in the long term. But in the short term, obviously, we have psychological impacts that are going to affect things, and this is where you get those minor buying activities. But during downtimes like these, I get a lot of questions about this funny little topic called pre-construction. Maybe you've thought about a pre-con lately. You're like, well, how does that work? I don't talk about it a whole lot on this podcast, but all I know is when I press the hammer function button on my drill, it keeps playing, can't touch this. I am not handy. I am not a handy person, but I know I get a lot of questions about pre-construction. And so obviously I've done a fair bit of research. In fact, our brokerage, we have access to dozens of top pre-construction developers. So if you have questions at all relating to pre-construction, if you have a specific units you want to look into and you want to become a client here at Watson Estates, hit me up with a message. I'm happy to help. But here's a comment that came in literally 6 hours ago, and this is not the first one. I've been getting calls, I've been getting emails, I've been getting a ton of questions from even my clients, existing clients who have looked at resale asking, what about pre-construction? Here's a question from Saeed. Thank you, man. Hey, Bradley, great content. What do you think of buying pre-construction condos and units as an investment? With prices falling every month, especially on smaller units, I'm not quite sure if it's a valid investment strategy anymore. So interesting perspective. Like he's trying to figure out, is pre-construction, is there money in there? I cannot skip over. I have to give the response that Nab piped in. Awesome response. Awesome response. I couldn't have said it better myself. I'm going to add a little bit to it, but here we go. Hey, Saeed, if you can afford not having your unit tenanted for 6 to 12 months, then definitely go for a resale because you'll get a much better price in pre-construction. So true. The reason people are turning to pre-construction, and they might not even know this is a benefit. This might not be the reason for it, but one of the perks right now of a pre-construction for some of my higher net worth clients is this idea of not having to deal with tenants, right? You're going to bypass the eviction process. You're going to bypass the evictions, and then you're going to bypass the surge of people out on the streets looking for properties that you don't want to rent to anyways. Then he says this, 20 to 30% cheaper for the same unit type, right? The resales. Especially when you factor in the closing cost for pre-construction, which can be north of 12% of your purchase price, which is enormous. Amazing point, right? A lot of people assume pre-construction is cheaper because, as Nab says here, they'll advertise $500,000 condo, but it'll end up being something like $560,000 is what he said. And the reason is because you have HST, you got taxes, not to mention the add-ons. They're trying to upsell you a ton of stuff. These builders, they're not making guap out there. Guap. It's like the Toronto way to say it. They ain't making that guap. Right? They're not making a whole bunch of money. These guys, they're making what, 10%? And if cost of things like aluminum and stuff goes up, right? Who knows? So they're speculating too, right? So you got to watch, what are their pricing? How are they pricing? And how do they line up? And what is your total all-in cost? But obviously it's going to be more expensive than a resale. I am yet to see any pre-construction project come out cheaper than a resale project, equal for equal. Mostly it's usually, if they can pull it off, it's because their square footage is something underneath 100 square feet. And then he says this, it takes longer to find a tenant right now due to the pandemic. Once we get a vaccine and people aren't as fearful and we get immigration going, finding a tenant becomes super easy. This is true, right? So this is the big reason right now. The other big reason that wasn't mentioned that I think is important to note is a pre-construction project is a long-term investment, right? And usually we're talking 2-3 years. So let's say you're buying a pre-construction now, it closes as early as 2022. I would actually rather close 2023. I'd rather keep, especially if it's a condo, I'd want to delay that. You're buying into the future prospect that our market will bounce back by that point, which we don't even have total certainty of that. There's no guarantees, but a lot of people have more confidence in the long term than they do in the short term in our market. But if you're savvy, if you're listening to our podcast, you're probably relatively savvy. You could probably carry a pretty decent conversation about real estate. And if that's the case, why not hold the cash? Why not get a deal? Why are you investing long-term when there is a short-term extreme buying opportunity that you probably won't see for another 10 years after COVID comes and goes? And so when we look, actually, one of the other things as it relates to tenants, just recently, Globe and Mail published this idea of furnished units seeing a spike. So they said this, in the second quarter, there was 1,877 furnished condo units offered for 12-month lease as an increase of 52% from a year ago. So what this is showing us, furnished units accounted for 12% of all condo rental listings in the GTA last quarter, along with 21% of the growth in listings compared to a year earlier. So all this to say, we see a huge spike of Airbnbs coming on our market. This is still going on, right? This is still going on. Now, I think you're going to have some people flip-flopping back and forth as travel reopens. Let's see. But some of the downsides of pre-construction, if you're considering that, one, it's more expensive, mostly because of HST. Yes, you get rebates, but it's still going to come out to be more, as our friend Nab highlighted. You won't have money for the, quote, real deal coming. This is what I was just kind of alluding to. You want cash. If there's going to be a buying opportunity, do you want to lock into a long-term investment right now? Is this the time to do that? I would say if you're going to do a long-term investment, if our prices were steady growing right now, right, and yet we still had issues with renters and with tenants and evictions and all that, then maybe. But really, do you not want to have the cash for when there is a tremendous buying opportunity? A lot of these builders, by the way, they're still kind of hurting too, I would assume. I mean, there's not as many stats on pre-construction, but there's a lot of foreign purchases that are down and they've been steady dropping. So these guys are getting a little more desperate, right? Here's a better option. Okay. If I could put forward two other options, number one is find an assignment deal that's closing in the next 6 months, maybe even longer, right? In the next 6 to 9, 12 months. Now, I've had other people come to me with assignment deals that are closing more recently and a little less enticing, right? Because condos haven't started dropping yet. Watch the condo prices start dropping, as they will in the coming months, probably this month as well, and next month even more. Watch that start happening, and watch those guys that were speculating long-term with the pre-construction a year ago that are getting more and more desperate. They're going to start paying higher commissions to try and dump these assignment sales. That's when you call me and you say, hey, Brad, guess what? They're offering 5% on this pre-construction, this assignment. You want to help me out? Yeah, man, let's do it. Let's make some bank, right? I like to look at it as seizing the opportunity. Number 2 is buy a heavily discounted resale unit, right? We're putting together a list right now, just so you know, here at Watson Estates of estate sales, foreclosures, and motivated sellers. I want to start kind of sending those out as a message. If you're interested and you kind of want to get in on that, feel free to send me your email. I can add you to that list. It's not available yet, but I'm hoping in the next couple months we can get that set up. But the point here is you're going to have heavy discount deals from these ways, and the big one is going to be the motivated seller. And people dying from stress. Maybe I shouldn't take dying that lightly. Sorry. My words, man, I'll tell you. I get myself in some real trouble. You should meet my parents. Our brokerage has dozens of top builders. So if you are looking for a pre-construction, also let me know. We can get our clients access to pretty much any builder across the city because we have such a large force of real estate professionals. We got that swag. Know what I'm saying? Know what I'm saying? All right. Yesterday was Wednesday. Hump day. Bank of Canada interest rate announcement day. Doesn't have the same ring to it. Bank of Canada keeps key rate at 0.25%. Thank you, Global News. And they see a 7.8% GDP drop this year. So Tiff McLam, kind of making his first grand appearance as the governor of the Bank of Canada, comes out and says, we're going to keep everything the same. And then not only that, he gives an unusual long-term prediction, or he shows his hand for the next few years, and he says that the key rate will be there until the economic picture improves. They noted the unusual clarity the central bank provided on a path for its key rate, owing to the unusual level of uncertainty. The bank expects the economy to contract by 7.8% this year, driving downwards by year-over-year contraction of 14.6% in the second quarter. Then it expects growth of 5.1% in 2021. Both figures are less rosy. I found this funny than Trudeau's Liberals relied on their economic update released 1 week ago. So obviously a disconnect somewhere in there. But the report pegged the annual inflation. Remember we were talking about this idea of deflation? I really didn't see deflation happening because it only happened in certain segments. But now the truth comes out. We are actually inflating at 0.6% this year. We're going to rise to 1.2% in 2021. And by 2022, they want it up to 1.7. The target for our Bank of Canada is they like 2%. For whatever reason, that's what they want. And so here's what they say. Here's a quote from the governor. If you've got a mortgage, or if you're considering to make a major purchase, or you're a business and you're considering this, this is how I imagine them talking. And you're considering making an investment, you can be confident that interest rates will be low for a long time. We want to ensure all Canadians feel confident in applying for variable rate mortgages until 2022. Okay, that last line I added in. But that's pretty much what he's saying. Variable. If you had any doubt about variable rate mortgages, you should not have that anymore. I mean, refinance is already through the roof, so maybe you're already locked in. But if not, and you're coming up for renewal, guys, we're not going to see interest rates going up anytime soon. But there are some question marks that could throw everything off. And here they are. The governor was quick to caution the forecast could easily be thrown off by a severe second wave, right? Also, we've been tracking, I've been very quiet about that, but it's very possible, by restrictions that remain in place beyond the end of the year, right? In other words, we got to get out of the state of emergency. We got to get out of the restrictions. And is there going to be travel restrictions? Probably. Or by a delay or surprise advance in development of COVID vaccine. Could speed things up. Could change very quickly. He looked to the fall as another potential issue, saying the bank's central planning scenario could be hampered if schools and daycares only partially reopen. So we're also tying our central bank to reopenings, right? Because that would leave parents, particularly mothers, to choose between work and childcare, right? We're going to get people caught. Should I work? Should I take care of my kids? And what plans are in place? Because they talk specifically in here, and I can't find it now. Central bank warned, here it is. Some lower income workers disproportionately affected by job losses or cuts in earnings will face prolonged income losses and push more households to the financial brink. Oh, well, that's okay. That's okay, because they're not buying real estate anyways. You know what? It's going to be the mid to high income people that are taking care of us. Well, let's talk about that. While higher income households may have savings they spend now, the report says some households will prioritize paying down debt and padding rainy day funds due to the uncertain economic environment. And we've seen that. We've seen people paying down that debt. So if you want spending to stimulate our economy, which is kind of how it works, where's that going to come from? The bank noted housing activity is also expected to slow over the next few years with the ripple effect of the downturn and lower immigration. Now, keep in mind, they're talking about Canada, at least in Toronto. I expect that'll be the case probably for the next 6 months. We'll see. We will see, but we also rely heavily on immigration. The next announcement, by the way, is September 9th, so there won't be anything really from there unless we get another emergency rate drop. The other thing that's happening is they're spending a butt ton of money. They announced shortly after that emergency drop, they included $5 billion of federal bonds being purchased weekly. And Scotiabank, Derek Holt, he says that they expect $215 billion more bond purchases through to next May. So it's not going to slow down. Cha-ching! Because Canadians don't want to spend money, who's spending it? The Bank Canada. So in conclusion, if I were to wrap up everything we've talked about today, tread carefully. Hold cash as you map out the housing trends. Figure out where there's a deal, guys. Don't buy condos right now. There are better deals en route, and get a variable rate mortgage. If you have any questions about the market or pre-construction projects, again, send me a message. In the meantime, we're going to keep tracking the local market and economy. You know what they call Bob the Builder when he's unemployed? Bob. I'll see you guys next time. Take care and keep it real.